But I do have the laser eyes, but the laser eyes mean that I believe that Bitcoin is critical technology to the human race, and it's digital property, and as apex property, it should presumably demonetize gold and investment properties and second homes and monetary indexes and ETFs, and that just means it should grow certainly past the market cap of gold and into the market cap of investment property. So, obviously, I think that the asset class over the long term is going to dramatically appreciate. I just can't predict the volatility or the trajectory between now and there, so I don't try to.
Mm-hmm. All right. Pivoting over to some other news. A lot of eyes are on Jack Dorsey. He's just announced that he is resigning from Twitter. He is also a Bitcoin enthusiast. He's led Twitter. He is leading Square. You've had a chance to talk to him at previous occasions. Do you have any idea where his mind is set in terms of, does he want to get into crypto? Does he want to get into Bitcoin?
I think Jack's the hardest working man in the industry, right? He's been leading Square, which is extraordinary, and they're just doing great. And he's been leading Twitter, which is another extraordinary job, and he's done a great job there. And he's also been very instrumental and influential in the entire Bitcoin community, which is almost like a third job. I don't know anybody that could do as well as he's done. I think the implications of this is he's going to focus more on Square and more on Bitcoin, and the world will move forward. I think it'll work out great.
Some of the criticism was from an activist investor of his, Elliott Management, was that he was not focused enough on Twitter. And in his resignation letter, he mentioned that he has moved Twitter to a point where it could move beyond its founders. I wonder, is it better that he is more focused, I guess, on payments versus social media and, other adjacent industries?
Jack's success at Square is stunning. And there was a point when Twitter desperately needed him. He turned around Twitter and he saved the company. And so he was instrumental there. And I think at this point, he said in his letter, he feels like Twitter's in a good place and he can move on to focus on other things, and Twitter's going to be great. I think that ultimately, there aren't many people in the world that could be CEO of a single company, much less two or have three major initiatives. I think Jack's done a stunning job at everything he's touched.
Mm-hmm. Moving on to another tech billionaire, Elon Musk, who you have also talked with as part of the Bitcoin Mining Council. Now, he's not been, as far as I can tell, he hasn't been talking too much about Doge lately. But have you been talking to him to, come around a Bitcoin more? Maybe, his ESG concerns can be somewhat alleviated. Where are those conversations at?
Well, I think in response to some of those early concerns, we formed the Bitcoin Mining Council, and we've already put out 2 quarterly reports. And the latest quarterly report showed efficiency was up more than 20% quarter over quarter, and sustainability is up to 57% or more. I think that the great resulting outcome of that scrutiny was we realized that Bitcoin mining is the most sustainable, cleanest, most efficient industry in the world. And I think that I think Elon's got a lot of things on his plate. He's launching rocket ships, and he's doing wonderful things at Tesla, and that's probably enough. We've all got our job to do. I think Bitcoin soldiers on, and Tesla moves forward.
With the Bitcoin Mining Council, what has changed since China's crackdown on mining? And we've seen the mining industry flourish in North America, shall we say, in its place.
I think that the China crackdown created an exodus from China, and it was a godsend for North American Bitcoin miners and for the North American Bitcoin business. It really transitioned Bitcoin mining to North America and to the West in general. It was an economic windfall. Companies like mine, we were able to buy nearly $1 billion of Bitcoin at dramatic discounts versus what we would have had to pay. We bought 500 million at 36,000 a coin or something, and we would have had to pay 85,000 a coin to buy the same amount. So it's good for Bitcoin holders in the rest of the world. It's good for Bitcoin miners. I've said before, it's a tragedy for Bitcoin holders in China. If you had to sell, right, it's a tragedy for you. It wasn't good for Bitcoin mining industry in China. But ultimately, it was a catalytic event that accelerated the institutional adoption of Bitcoin, as well as the adoption of Bitcoin technology in the Western world. And it cemented the idea in people's head that Bitcoin is Western technology. It's good for the United States. It's good for Western Europe. It's good for the dollar. And I think that that was a critical event in the development of Bitcoin.
Mm-hmm. We see India discussing in their parliament that they may consider banning private cryptocurrencies like Bitcoin in favor of making way for a central bank digital currency, a digital rupee, and a framework around that. So there seems to be two tracks that countries are taking. They can take a more private blockchain route, more centralized route in regulating digital currencies for their own central bank digital currencies, or allowing private cryptocurrencies or it's a public cryptocurrency really, like Bitcoin, letting them grow and proliferate. As you see this divergence, what do you see happening?
I think that this has been a great year for the institutionalization, the maturation of the crypto industry. And in this particular way, people are realizing that there's a digital currency and there's a digital asset. And the consensus among central bankers, Christine Lagarde, Jerome Powell, all the regulators, even in India, even in China, is Bitcoin is digital asset. They'll call it a speculative asset or a store of value asset, but it's an asset. It's not a currency. An asset means you can hold it as a store of value, and it competes with gold or it competes with a second home as an investment property. A currency is a medium of exchange that you can transfer tax-free. And it's pretty clear that governments want to keep control of their currencies. The rupee, the dollar, the euro, the CNY are currencies you can use as a medium of exchange and transfer tax-free. They're not threatened by your ownership of a digital asset as long as you agree to pay tax if you were to transfer it. So all of these regulations in India and the like, they're really regulations constraining your use of a digital asset as a currency rather than as a property. And you could just boil it down to this one observation. You can own as much Bitcoin as you want, but if you give it to your friend or you sell it in the open market at a profit, we want you to pay capital gains tax on it. Mm-hmm. And if you just acknowledge that, then you realize that the future of the industry is quite bright, because Bitcoin could become $100 trillion digital asset class and still never be, replacing the rupee or replacing the CNY. I think that the real struggle in digital currency is going to be US dollar stablecoin versus the Indian rupee. And I believe that if major US banks issue US dollar stablecoin, then you're going to see stablecoins grow from 130 billion to a trillion to 10 trillion. And I think that the US dollar is the threat to a digital rupee or a digital CNY. And you want to stay focused on that struggle. That will ultimately result probably in capital controls where countries with weak currencies, a weak peso, a weak rupee, a weak CNY, they're going to be concerned about all their citizens swapping their currency for the dollar and moving it back and forth. And that's the maneuvering that's going on behind the scenes there with the regulators.